Hello again, people. Right, it's Boxing Day 2020. I hope you're all having a wonderful Christmas break. I certainly am. Eaten too much, and dare I say, drunk a little too much as well, but absolutely loving it. Had a lovely, beautiful long walk yesterday in a cold, sunny day and evening. Got some really good pictures of sunsets and thoroughly relaxed. And trading, I know some of you think I'm mad opening the charts on a weekend and also bank holidays like Christmas Day and Boxing Day, but trading is an obsession for me, and I think if you want to crack it, as it were, you need to be slightly obsessed, and I just treat it like a computer game. Admittedly, cryptos at the weekend and cryptos on the days that the markets are closed, like today and yesterday, are for me at the moment still demo trading, so it's ultra relaxed, but learning all the time, and that's what we have to do when we're trading or considering trading something that potentially I have no idea why it moves, unlike normal currencies where we get times of day that we know all the bankers and the big boys are watching the charts and news and so on and so forth. So it's to be traded with caution, I think the moral of that is. But I've opened this chart. I was going to draw a few levels on it, and I thought, why not do it while you are able to watch, as it were. So clear this chart down, and just need to check when we get down to the lower time frames I haven't got any rubbish on here. That will cause a problem. Let me get rid of a few of these. That's the vertical lines. We'll stick one on at 8 AM, 2 hours difference. Oops, why didn't that work? Sorry, I should have done this before I opened the chart. There is a spike on here that looks scary. It doesn't show on the other broker, so that would be a problem, a real problem, if you were in a trade and got taken out the wrong direction. Not a problem if you were taken in the right direction, of course, but so what am I looking for on this chart? Well, if we start on the lower time frames, we can either track it on the higher time frames just by doing traditional levels on the lows of candles, because as we know they will represent support areas. So I'll explain what I mean. If we put a low on that H1 candle there, then when we drop down, we will see the line chart. I don't like this. Don't know why that changed. We will see the line chart as a potential support area. So quite simple, and then obviously we can see we've got a jobby going on there as well. So you can either do it that way, and you can clearly see there's flip areas as well going on here. The flip, what I mean by that is the price closes a wick, price opens with a wick, or not a wick at the time it opens, but pops down, and then it's created a historical battle area, if you like, between buying and selling. So on the lower time frames you can also do it this way and just stick a few clear areas that when price comes down, we know this has created a high here, it's going to cause a problem, and lo and behold, price breaks it, pops back, uses it as support, becomes resistance. That is the whole process that we trade. So when you see these big blue lines on the charts, basically this is what we're looking at. And as a trader, or a planner of a trade, if you like, what I'm trying to do is decide what way I want to trade. up or down. Simple as that. So I know when price comes and tests this area here, or if I know it's broken through this area here, then that's the likely next area to go. Simple as that. It really doesn't have to be more difficult than that. We've got an area down here we can clearly see. We can either draw it with the big thick blue lines, or we can draw it on candle lows, possibly an H4 low or something over there. Let's have a look. And I didn't preempt this. I haven't cherry picked that level. Let's have a look and see what it was, and lo and behold, there's the highlighted line. There's the H4 low area around here. So there we go. That's it. That's how I plan a trade. If it breaks up above this again, we could aim for this area up here. It's as simple as that. It doesn't need to be any more complicated than that. So when you see the blue lines on the charts, you can either draw them on the significant, or, you know, by that I mean H1 on an M5 potential trade, or as I've just shown you, you can draw them on the line charts. So that's it. I'm not going to make any predictions as to which way the price will go. That's not what I'm here to do. Just planning the trade and then trading the gaps. I used to use this as a catchphrase sort of thing: trade the gaps between support and resistance. That's all we're looking to do. And then using the 3 candle reversals, which we are effectively trying to do at the moment on this H1 chart. That's the penultimate high there, that's the ultimate high, and the break below the low of the penultimate candle's low, which would be that level there. The close below that would be the 3 candle reversal. Then we'd expect to pull back, and then we would expect to continue down. As you can see, there's so much support below us that I would prefer, and this is what I was doing just before I decided to make this video, I would prefer to continue looking for longs. Problem we have here, looking at this, and again this is thinking on my feet, we have divergence. So this could well continue down, and if I was to trade this down, then I would want a clear break of this area here, really, unless I'm just scalping the 1 minute chart between all of these H1 candle levels. So there is a potential gap there, those lower 2 green lines. So that there, what price I'd expect to do is break down through it, not touch this one, because that means it's already potentially over the move. Break through, mess around there, much the same as it's messed around here, and then broken through, messing around here, potentially broken through. So that gap for a scalper is likely to be huge. Yeah, I mean, that's a 28 pip gap. If I want 5 or 6 pips or 15 pips, excuse me, that's what I'm looking for as a scalper. So yeah, plenty of opportunities. That's how the levels are drawn. That's how I draw my levels anyway. And that's my thought processes. You know, we've got tons of stuff below, which is pretty obvious in an up move. So the other thing I should say is there's my descending trend line. We can draw it on the 5 minute as well, tighten it up to, and I've mentioned this many times in previous videos, using the line chart and drawing these manually so that you get a feel for what's going on. So this was a valid line, trend line, because this low was broken by the price here, so that's a valid touch point. That's a valid touch point when the price drops below there. But as you can see, it used this trend line, descending trend line, basically to the pip. But there's no surprises there. We've got this level here as well, old support, broken, tests as new resistance, and it just goes. That's how price moves. Same here. And so on and so forth. So, you know, line charts can be traded just as simply as candlesticks, in my opinion, using the RSI histo and trend lines. So as you can see, it pushed further up. Now this is potentially faking people into the long side if they don't know what they're doing, but you couldn't actually draw an uptrend at this point either. This was still making a new low, but you can see how you could have joined that and that as a valid trend line. Then you've got the break, and it's just gone popped up as opposed to trended up, and then it's trended back down again. So you know, we could micro analyze these levels. When price comes back up, if it trends up through this resistance line that's made this price go down, then the next level to get through to the upside would be there, and then effectively we've clear air to here. So, you know, you can continue analyzing this stuff using the rules that I use, or making up your own rules, whatever you want to do. But you know, this works well for me, so there's no reason it wouldn't work well for you. That's another area that would cause a problem, and all of these little problem areas will have red and green candles. In other words, supply and demand battles. Okay, so red and green, or red, green, red, and it goes on. So all we need really is to be able to draw something like that, connecting a zigzag to the long side. I won't draw it because it gets too complicated, and that would be then a trend break, and that's what we trade. I talk about two lines: descending trend line, ascending trend line, 3 candle reversal to the long side, RSI histo, something like this, bust up, pull back, break and close above the bust, preferably above the 20, and as you can see, there is what happens, and there's your ascending trend line situation. This is the area you wanted to break above. In this instance, all of this in order to continue long. Simple, absolutely simple. 3 lines really. Your descending trend line, your ascending trend line, and then your valid area of resistance that needs to be trended through. Not popped up through. It needs to be able to go low, high, higher, low, higher, high, pull back, ascending trend line. Number 5, swing 5 is our impulse move. So hopefully that's helped somewhat. This is what I'm just watching this morning. Not like a hawk because it's a holiday, so I'll be in and out all day, but there are opportunities everywhere, up, down, and as I like to say, sideways. So enjoy your bank holiday or your Boxing Day, guys, if that's affecting you, and thanks for watching, and have a good relaxing time.